Welcome. This is Tax Pro Nation, the home of the independent tax professionals, where you can find a tax community, maximize your earnings, and live life on your own terms. I'm your host, Imelda Ledesma, COO of Pronto Tax School. In this episode, Andy will dive into the fun and exciting world of QBI deduction strategies, discussing how to help your clients maximize their QBI and save on their taxes.
Yeah, so everybody that's jumping on now, Andrea. So I'm subbing in for Andrea. She had forgotten that she was traveling today, so we were kind of scrambling a little bit here at the last minute. We were going to cancel the session, but I wanted to actually address this topic today, and kind of finish out the week with you guys. So, but the link to join, you probably didn't get that on time the way you usually did. So Imelda is just sending out the link right now to make sure that people can get logged in. So Linda and I were just chatting for a couple minutes about costs and charges and, stuff that we think about. I think when it comes to these charges, like Linda and I were talking about, she's kind of helping out a client with really some tax projections, tax planning, and not charging too much and kind of doing it somewhat based on the clients. They're not making a lot of income. They're retired. And so I think for us, it's the way we look at it at Pronto Tax School is, we want everybody to be well rewarded for your efforts. At the same time, we respect that there's not just one way to do things. So I think sometimes people get into like, you have to charge this and you have to do this and you have to. So I think a lot of us are independent. We're independent minded. So what if you choose to not charge as much or do some things for free or whatever? I think there's a lot of different ways you can be successful, running this type of business, which is one of the things I love about the business actually. And so we were just kind of chatting on that. We're going to get started here in a minute. Did the link go? The link went out then, Imelda?
Yes, it's going out right now. It's sending. So yeah, I received mine already.
Okay, very good. To make the best use of everybody's time, I'm going to go ahead and get started, and then obviously people will get the recording as well in your account. I did prep some notes on the topic. So topic for today is QBI deduction strategies. And I figured I'd start the discussion just by, we've had this deduction for a little while now, so we've gotten accustomed to it. And it's pretty awesome. I mean, if you would have thought and said, hey, you're a small business owner, so as a result of that, the government, we're going to only let you pay income tax on 80% of your net income as a business owner instead of 100% like other people pay, right? That's pretty amazing. That's something that I actually feel myself just looking at the situation that this is something that has spurred people to start businesses, to stick it out in businesses, and has overall lowered taxes for small business owners, quite a bit, right? And so it's kind of like I view it as a little bit of a dream come true. I mean, it would maybe be better if you only pay tax on 50% of your income, but even not paying tax on that 20%, it's a big difference for a lot of people. So there are some situations though, as you guys know, right, where people could think that they're going to get that deduction because they have business income, but they actually don't in reality, or they get a reduced amount. And so these would be what we sometimes refer to as haircuts. Where they get a haircut on their deduction. If you get a bad haircut, it's not usually a good day. And so there are some people that can prevent these kinds of haircuts from happening, and that essentially is us. Those are the people that where we get up to speed and on advanced strategies to not have this deduction, this extremely valuable deduction, be reduced or even eliminated. So that's really the purpose of this discussion today, is that at the end of this discussion, you feel even more confident than you do now that in the event that your client has a possible loss of the QBI deduction or a reduction of the QBI deduction, that you can step in for that client as much as you possibly can to protect their access to this deduction and to maximize their QBI deduction. Okay, so that's the overall, by the end of this discussion, we're all looking to be at least a little bit better on that, right? I do want to kind of, I don't know if I would say admit, but I want to state up front that for most clients, right, we really don't need to use strategies to keep the deduction or maximize the deduction, right? I mean, it's like, it's done in the software. It happens. We know by now, we've had the deduction for a while, that it's 20% of net profit or 20% of taxable income, whichever is less. And so the software kind of handles it, right? In the majority of situations, I would say. So maybe I can get some feedback from you guys. Is in your business, do you see often or at all the QBI deduction for your clients being either limited, so haircut, or eliminated? Like, is this something that you see in your real life as a tax professional?
I just want one lawyer that doesn't get it because she's a lawyer and she makes W-2 income, and then the schedule, she does consulting on the side too. So
okay, so Marley has a profitable Schedule C consulting business.
oh, yeah.
In addition to like a higher income W-2, so she does not receive the QBI deduction on that Schedule C business income. Okay.
Oh.
What about you, Linda?
The last couple of years, some years I have gotten it, but it's a very small amount because I've had a very small practice. It's growing now that I'm doing it more full time because I don't have a quote W-2 job anymore, and I'm quote retired. But this year I don't get no QBI because, like I said, my expenses and everything out. Even though I had good income, the expenses have undermined. I had a decent income last year, but the expenses from last year still undermined that to the point where I'm running in the negative, which, okay, that happens on some years.
Okay, so that's more of an issue than that there's no deduction to be applied because the net income is not there, right? So that could be something too that we look at a little bit further down in this discussion of how the carryover of a negative amount can affect the upcoming year's deduction. So we could go ahead.
It could, but I'm not going to really worry about it because with the loss, I'm paying less taxes. So I'll take the loss over the little bit of credit.
Okay. That's one way to look at it. So overall then, because this discussion is not going to be relevant to the majority of people's clients, it's mainly going to be relevant to clients that are higher income, right? So that's the overall scenario that we have going on here. Sometimes, like Marley's mentioning, the people who are exposed to either losing the deduction completely or having it reduced are kind of like sometimes your best clients. So depending what your strategy is as a professional, right, are you wanting to get more higher income clients? Are you wanting to kind of stick to clients that don't have some of the higher income? So it might be part of your overall strategy as to how much this is going to affect you. But I do want to just, in general, run through real quick. This flow chart right here, which is created by Intuit, to me, I think is the best sort of simple, as simple as can be explanation of which clients are going to actually need the strategies that we're going to talk about here today. And we will get into an example as well, like in the actual software, so that this isn't all kind of theory, right? But you're going to take the taxable income, right? And it's going to be either, below the threshold amount, right? Where the deduction could be limited, or it will be above. At that point, it's going to be determined, is this a specified service, trade, or business? Again, like Marley said, such as an attorney, right? That's a SSTB, or it's not. And so you're going to kind of follow this flow chart to see, does this client even need me to try to do strategies to keep their deduction, right? Or do we not need to do anything? And the software is going to claim the deduction optimally without me doing anything, right? So, and then once you're following into either SSTB or not SSTB, you're going to see the options again based on income, right? So the income level and the deduction availability at that income level depends quite heavily on whether it's a specified service, trade, or business or not. So I think that's probably a good, and you can, let me chat you guys this link so you have it. I think most of you have probably seen this already, but I think this, when I try to sort of simplify in, do I even need to be concerned about the QBI deduction for a particular client? I've been using this flow chart, I think, for now like a few years now, and it just kind of helps me understand like whether the client needs us to even delve into these kind of things at all. So in general, does that make sense? Are people, I think you guys are already relatively up to, quite up to speed on the QBI deduction in general. And like I said, probably have already seen this flow chart. What are overall thoughts or any questions just at this kind of grassroots level? Okay, cool. So then in general, right, the people that are higher income are going to be exposed to the haircut. So let's talk about certain situations that come up where the deduction can be limited, and we may have an opportunity to apply a certain strategy to either protect the QBI deduction, maximize it, or somehow get a better result for the client with regard to this deduction. So let's look first at the SSTB issue. And this might be a good place for you guys to have your own software open. I'm going to get my practice example open, but you might want to have your software open so that you can make sure that you know where the inputs and outputs are on your own software. So let me get that going right now. Okay, are you guys seeing a software example for Jeremiah and Blanca? Okay, so let's say, just to create an example here, so let's say we have an extremely high income or quite high income W-2. So $500,000 on W-2. It's a married couple. So we're trying to just get above that $415,000 limit, or that threshold, right? So we're trying to bring the taxable income above that. In order to do that, let's also say that we have net income. So in this example, we would be so we'd be at 500,000 of wages, 314,000 of net income on Schedule C, and then we would have a QBI deduction in that case of 0, right? What could be done? So then, and the business in this example is electrician. So is an electrician an SSTB or not? No, right? So when we go into the flow chart and we say, like this, okay, so I'm seeing my client right now. I'm seeing my client with 300,000 of net income. $300,000 times 20%, right, would be $60-something thousand of deduction. Their tax rate, 37%. So we're talking about like 20,000 something in tax reduction, right? So it's a lot that and I can see they're missing out on that, right? They're not getting that. So I have to try to think, what are the options for them to get that? And then if we go back to that or reference that flow chart, right, we need to then follow the right trail of it's either an specified service trade or business or it's not, right? So electrician is not an SSTB, right? So what are the entries in your software where you can tell the software this is an SSTB or it is not? Is everybody on the call familiar with how to do that in your own software? That would be something for sure that we want to do, right? Let's say it is an SSTB. Does that mean that you could not get any deduction at this level of income, of taxable income, no matter what?
When above the threshold, they get nothing if they are an SSTB.
Yep. And so with the tax code, right, whenever we say no matter what, it might be one of these little trick questions. It might be one of these things that I prepared ahead of time and said there are a couple exceptions. And so let's take a quick look at one possible strategy for, like, this would be an example, right? Let's say this was an SSTB and instead of that being an electrician, it was an attorney. Okay. So the assumption on that is like, wow, super high income, right? Like 800,000 some income. It would be great to get the QBI deduction, but it's set up specifically to not allow this person to get the deduction. Because of the way that tax professionals, the way that we think like, at our best, I feel like it's like, okay, they're going to try to deny this deduction, but maybe there's some kind of way that we can legally do something to where they can get the deduction, right? That's sort of the mindset that pays off for clients and that they really enjoy, right? So let's take a quick look then at what would an option worth exploring be. So let's say you had a business that had a couple different lines of business or services. This has been a little bit on the controversial side, I guess you could say, about the idea of reporting your taxes in a way where you say, hey, part of my income is SSTB income, but part of my income is not. So for example, like splitting out a separate entity I'm trying to think of a good attorney example for an attorney. Let's say an attorney, for example, he
owns the building he works in.
What's that?
He owns the building he works in.
Owns the building he works in. Okay. What would that do for him in this example?
Well, in theory, he could pay himself more rent. If he can attorney practice and the real estate practice.
Right. Okay. Exactly. So that might be a strategy to consider as well. So if they
are you thinking on the lines, Andy, of carving out a section of the business that could be considered non-qualified SSTBs to see if we can just get the 20% on that piece of the pie?
Yeah, I like the suggestion from Sean though too, because that may be more less hassle in some. So we're looking for a way where we can get this income out of the category that we're being denied the deduction. We're saying, hey, you have to pay 100%. Mm-hmm. Well, I really would prefer 80%. I'd really prefer to pay 80% rather than 100. So we're trying to figure out how could we get some of that income into a spot where it would only be subject to, we would only have to pay tax on 80% of the income. So I like Sean's idea of if the person owns a building, or maybe if they're considering buying a building, they can handle that through rental and kind of get some of that income out of that category. The idea of splitting out lines of business would be along the lines of what you're saying, Marley, where let's say, for sake of example, that this attorney has a part of their business where they're actually providing services, legal services, but then they also sell like seminar speaking. They speak at seminars and generate some income from that. Or let's say that they have a royalty from like a course that they've created or a book that they've sold, right? So for those of you that do accounting and bookkeeping, right, you might already know that have different classes set up of different kinds of income for these businesses. Or if you're not at that level of familiarity with the person's business, it might just be worth asking, right? Like, could you kind of tell me, like, are there different lines of your business, different ways that you earn income? Is this all legal services income? And this is a good little article here that I'll chat you guys, that the splitting off of the business thing is, like I said, it would be somewhat of a controversial thing. Like, some people are really, really against it, and they even get like kind of upset about even talking about it. But if you review that article, there are a couple ways to do it the right way. That's acceptable by IRS standards and has already been accepted as such. So that would be the kind of thing that for this client that was an SSTB that was getting denied the QBI deduction completely, would be one strategy that you could pursue. Or also looking at a variation like Sean said about shifting that income in a different way, in a creative way, but with the same goal in mind, right? Is that I would rather pay tax on only 80% of this business income rather than 100%. What are my options for being able to do that, even though I am the exact person that the IRS is trying to deny this deduction to?
Thank you for joining us. I'm Imelda. Join us next week as we continue to share mini audio clips of the Schedule C tax prep process. If you are interested in listening to the full process and want to be part of the Dream Team community, please visit prontotaxschool.com or email us to support@prontotaxschool.com. Being part of the Dream Team membership comes with getting expert support, top-rated training programs, and weekly video live events. We look forward to having you on board.